All right, we're going to talk about my own Roth conversion. That's right. I had $248,000 left of traditional 401k funds that I wanted to convert to Roth, and I've been delaying it. I'm a Roth guy, but I've been delaying it because I didn't want to pay the taxes. But I finally got over it and I converted. Now, when I did the conversion, I stumbled on some very interesting points here. The typical Roth calculators, all the calculators on the web that tell you when you should convert or not, that are supposed to take into account all these factors, have the wrong defaults. The settings and the assumptions in these calculators are wrong. And I'm going to go into what you need to know to convert. Now, I did my own calculations using the calculator here, which I'm going to share. I converted $248,000. Now, when I put it into the calculator here, this is bankrate.com. This calculator is the same as what you'll see at Fidelity or Schwab. When I put in my numbers, it told me I should not convert. It said converting traditional IRA or traditional 401k dollars to Roth dollars will cost me $53,000. You can see it right here in the graph. Now, most people would stop and say, I'm not going to convert, not going to do it. The calculator said don't do it. It will actually cost me money. Now, I'm going to show you why that's wrong. Okay, now we have to get into details of this. Now, the number one thing we know when you convert, you're going to pay tax on the Roth conversion. Now, the calculator is assuming that the current tax rate is 25%. Again, these are the default settings if you just walked into the calculator. You can modify it here, which is what I did to get to the right answer that told me I should convert. We're going to get to why that was the case. But the default settings here assume you're in a 25% tax bracket. So if I add $248,000 of income into my tax bracket, that's going to cost me $62,110. Now, by the way, if you're in the 25% tax bracket on a $248,000 conversion, you're going to be jumping up to a 37% tax bracket. That's one flaw with this calculator. It's actually off on the tax. It's actually going to cost me more, but stay tuned because I'm going to show you why it still made sense for me to convert. Now, when you're deciding whether to convert or not, you've got to know, okay, I've got to pay the IRS $62,000. I've got to send that into the government. But if I stayed as a traditional, I could have invested that $62,000. We're not assuming that $62,000 goes away. There's a cost to that $62,000. So when I convert, I'm having to take $62,000 off the table if I go Roth. But if I stay traditional, I get to keep that $62,000 and invest it. And that investment is going to grow over time. And you can see on the calculator here, it's telling me that at a 7% rate of return, that $62,000 in a taxable account where I will pay taxes, it's growing, is going to come out to $197,000. It's going to come out to $197,000. Now, this is in 20 years, because that's, again, what the calculator assumed. It assumed I was 45 and I was going to retire at 65. That's actually pretty close here. I'm actually 44. So that one's not too far off. And this is probably the biggest piece a lot of people don't think about when they're converting to Roth, and a lot of Roth fans don't take into account. That money that we have to pay the IRS, and sometimes even your state, depending on your state, you've got a state tax, that money could otherwise be invested and grow for you, building wealth outside of your retirement account. We can't discount that. So the calculator is taking this into account. Now, why did the calculator tell me I should not convert and that it will cost me $53,000 to convert? It's very simple and it's right here. Tax rates. This calculator has an assumption that my tax rate now is 25% and my tax rate in retirement is going to be 15%. Well, why does that matter? Because I'm paying tax on the conversion now at a higher tax bracket, which costs me more. And it's assuming my tax rate's going to be lower when I reach retirement plan age. Now, that might be the case for you, and that might be the case for many. But for most of our clients who are building wealth, they intend to have more income in retirement than they have right now. They're building wealth, they're building assets, and I've seen it over and over and over again. Clients get in their 60s and 70s, and they have more income than they had in their 40s and 50s because they've built businesses, they've built assets that create income and value over time, and they've built large retirement accounts that are traditional, which, by the way, when you distribute is taxable income, pushing you up into a higher tax bracket. So that's the number one problem, is the assumption is you are going to be at a lower tax rate in retirement. Now, let's just say I'm going to stay in the exact same tax bracket. I'm not going up, I'm not going down. Let's just say I'm going to stay at the exact same tax rate. This is what I did to calculate my Roth conversion. All right, let's plug in my numbers on the calculator. This is the bankrate.com calculator. This formula and this model is used on all the other sites, Voya, Fidelity, TD Ameritrade. They're all using using the same calculator and the same method. But take my $248,439 of my traditional 401k dollars. I know I'm a Roth guy that I finally converted to Roth. Now you're going to look here. There's 3 areas that affect the decision on whether to convert to a Roth. Now the first thing we think of when converting to Roth, of course, is I've got to pay tax now. And when we know we have to pay tax now on the conversion, that's going to take money off the table. That money could otherwise be invested here. And that's, of course, the big difference of going from traditional to Roth. You're going to have pain now because you've got to volunteer money to the IRS and some of you to your state government. But you get the benefit of this account growing and coming out totally tax-free at retirement. Now, there's 3 factors that are critical in this calculation. When I put in the defaults into the calculator, it told me it will cost you $53,000 to do a Roth conversion. In other words, you lose, Matt. Do not do a Roth conversion. You will lose. You will have less money in your pocket. But as we go through the numbers here in the analysis, I'm going to show you why that's BS, why it's actually wrong, and why you shouldn't be following these calculators, or at least the default settings in them. So let's hit the 3 areas we got to address. First, the tax rate now and the tax rate in retirement. Second, what is the investment tax rate? That $62,000 of tax that it's assuming I need to pay right now, what's the tax rate on that as it's being invested? Because that's not in a retirement account anymore. That's non-retirement account dollars that I would have had to pay to the IRS, but if I didn't convert to Roth, that money could have still grown. We got to take that into account. And then the last piece is the rate of return on our investing, the money in the retirement account, as well as the money that has to get paid to the IRS if I do the Roth conversion that I could have otherwise invested for another 20 years. Okay, so let's start with the first factor here. Now, the calculator assumes something that I don't believe is correct. They're assuming that I'm in a current tax rate of 25% and that at retirement, I'll be in a 15% tax bracket. Now, a lot of people make that assumption. A lot of financial advisors say that, hey, when you hit retirement, you won't be working or you won't have your business, so you'll have less income. And because of that, you'll be in a lower tax rate. So don't worry about all the distributions coming out of your traditional retirement account. A Roth's not that valuable because you're pulling the money out later in retirement when you don't have high income. I'm sorry, but that's not been the case for a lot of my clients. 20 years of doing this, talking to clients, really building wealth. They're accumulating assets that produce income. They're taking out large retirement account distributions. If it's traditional, it's taxable. They're staying in a high tax bracket. Now, there's the other group of folks that say, hey, tax rates are actually be higher in retirement, not because your income's down, because the government keeps raising tax rates. And if you believe that's the case, that's even more reason to convert right now. But we don't have to go to that extreme. Let's just assume the tax rates are going to be the exact same now as they're going to be in retirement. Now, for me, I just assume the highest federal tax rate of 37% right now and in retirement. And at 37%, when I do this, now it says you win by converting to Roth. Now, we still got 2 other factors to hit, but now this swings from me losing $50K to making $63,000. Like there'll be $63,000 more in my pocket now because I converted, because I changed that one factor in the calculator. The tax rates now and in retirement. All right, so now I'm up $63K, but I kept looking at this calculator to think of my specific situation and should I actually convert? Guys, this was my money on the line, my own wealth, sending to the government or getting to keep it and invest it. So I was very intentional about this and doing it specific to my situation. And that's what everybody needs to do when they're doing a Roth conversion. I'm not saying a Roth conversion's for everyone. It's got to be specific to your situation. So make sure you're considering the right inputs here. Now, the second thing I changed on the calculator, because the defaults weren't right, was the investment tax rate. Now, the investment tax rate set by default is 15%. I don't believe that's the case. The long-term federal capital gains rate is 20%. I don't know who made this calculator, but investment income is at least taxed at 20%. This could be dividend income. This could be interest income. This could be rental income. This could be capital gain when you sell an asset. It's at least 20% in my experience. If you have any income of substance, you're going to be at least at a 20% tax rate. And that matters because this decreases the value of the money that I'm sending to the government for the Roth conversion. Therefore, it swings me another $20K in favor of doing a Roth conversion. Now, the third factor and calculation that was wrong in the default on the calculator is the investment rate of return. Now, this assumed a 7% investment rate of return. And you can do that. If I kept that, it still told me I should convert to Roth. But I've been getting a 14% rate of return in my retirement account. A lot of self-directed investors we work with and accounts that we have are getting this type of rate of return. So I assume that for myself in calculating this. Now, this was the most drastic change in whether I should convert to Roth or not. Now, when I changed the rate of return to 14% in the calculator, this is now a $500,000 benefit to convert to Roth. I will have $500,000 more money in my pocket because I converted to Roth, according to the calculator, on the assumptions in my situation. In my circumstances, I should convert to Roth. It's a no-brainer. That's why I submitted the conversion form last week, to just go freaking get it done and pay the tax already. Now, there was one last thing in here, and this is maybe a bonus reason for some of you that was interesting to me. The calculator assumed I was 45 and I want to retire at 65. That was actually pretty close for me. I do want to retire when I'm 65, but I'm only 44. Now, if I change that 1 year. Now the decision to convert goes up again another $85,000. That one additional year of tax-free growth in the Roth account gave me an $85,000 benefit. So another lesson here at the end: the younger you are, the more valuable the conversion is, or I should say the more time you take before you start pulling money out at retirement. Because now it went from a 20-year window to a 21-year window of investing. That one additional year swung at $85K in my favor on doing a Roth conversion. Because again, more tax-free dollars are building up and growing in the account and compounding, benefiting me later in retirement. So on that last point, if you have a long-term view to say, I'm going to be investing for 20, 30 years longer, I'm not going to pull the money out till I'm 70 or 75, you significantly benefit by doing the Roth conversion. If instead I change that and said, nope, I don't want to retire at 44, I only want a 10-year horizon, zero reason to convert. Look at the calculator here. It says, zero reason to convert. That's why a lot of times when I have clients in their 60s that are like, Matt, should I convert? Only if you have like a really windfall big deal and you're like, I convert $100,000 and turn it into $1 million in 2 years, would I convert to Roth? But otherwise, the typical 7%, 14% type of return, it doesn't make sense. So the decision on whether to convert is specific for your situation. Do not rely on the default settings in the Roth conversion calculators. They will jack you up and it's going to slant you towards not converting. So make sure you're inputting the right tax rates, the right investment tax rates, and the right investment rate of return. And also keep in mind, make sure you have the right time frame of how long you will continue with this account and investing it. So make sure you have the right current age and retirement age in there to determine whether you should convert or not. All right, now based on my example, let's hit some takeaways for everyone else on whether you should convert or not. And let's take into account these same factors I talked about. The first one I want to start with and actually work backwards here is, what is your investment time horizon? If you're going to convert now, how much time do you have until you want to pull the money out? If you're in your 20s or 30s, it's a no-brainer. Convert to Roth now. The benefit of the tax-free growth over time, 30, 40 years, is insane. But also, for some of you that are like 50 and you're like, Matt, well, I don't know, that doesn't seem fair. The 20 and 30-year-olds, I'm just hearing about this. I never knew about Roth or understood the power of it. Guys, if you don't pull the money out till you're 70, you've still got 20 years to convert. Now, if you're like, but I want to start drawing the money out when I'm 59 and a half, maybe you shouldn't convert. I don't think it's beneficial for you to convert. I don't know that the compounding and the value of that Roth money growing is worth it in just a 9.5, 10-year horizon. So first, focus on the length of time you have to continue to invest those Roth dollars until you want to pull it out in retirement. And I like to think for many of my clients, the Roth bucket of money is the last bucket you draw on. So if you have other funds and other resources, draw on those before you get to the Roth bucket of funds. So your Social Security income, your other savings, maybe your other traditional retirement accounts, leave the Roth until your late 70s. Let that grow. That's your tax-free bucket of wealth. So let that be the last one you draw on. Okay, the second factor that is important, and everyone's situation is different, is will you be in a lower tax bracket at retirement than you are now? So let's again assume you're in your 50s. You're in the highest tax bracket right now. You're in your highest times of earning income. You're making great money. You're at the max federal tax rate, and you don't have a business or other investment income to rely on in retirement. You might have some assets, maybe some equity in your home, some savings, and a significant retirement account, but that's it. And so you will likely have a lower rate of income when you hit retirement because that large income from your W-2 or whatever it may be is going to be going away. So you'll simply have your retirement account, Social Security, maybe some other savings or investments to rely on. So if you truly believe that and look at your numbers and be realistic that your taxable income is going to be significantly less in retirement than it is now, it is another factor against whether you should convert. Now again, if you have a long time investment horizon of 30 years, the Roth might still make sense. But if you only have a 5, 10, maybe even 20-year time horizon, it might be on the fence of whether to convert or not. All right, now the calculator I was using here is bankrate.com. A lot of the other sites have this similar calculator, but make sure you're putting in the right inputs to give you the right direction in your specific situation, whether you should convert to Roth. As for me, I've converted. I have no more traditional dollars anymore. I'm just going to Roth and roll from here on out. Please subscribe to the channel. I've got more tips on how to build wealth, grow your retirement account, save on taxes, protect your assets. We'll see you next time.